with you. That's why you're not getting funded across all this time frame. Otherwise, you get your initial set of funds and you stop, right? You're going now, you're using that fund to do the business that you're supposed to do with that fund that you've acquired. Then you go for your next round. You start that journey again at that point in time. But that time you have a better help. You've already got the funding. You have your first set of investors who will take you into the next one also at times, right? But if you haven't done that and you're only being seen in investor tables or pitch forums everywhere, then you're definitely after 12 months you're not going to be investing. Nobody's going to be investing because there's a somewhere there's a question mark against your name, kind of thing, right? So that's yeah.
Perfect, perfect. Nehul, I would just like to add one more, dimension to it. You are so spot on. Since the entire forum encouraged to be blunt and spot on, I would also accept that what I have observed with these founders, that they have made their money, they are left or at that age that आया तो ठीक है, if we get it's great, otherwise it's okay, we'll survive. Somehow we are surviving with these 15 clients. So either they got the offer, but they found it too expensive, like somebody asking too much equity. And the second is, until we get that kind of an angel investor who is actually fitting into our criteria, we don't care about funding. So just let it go the way it is. So that's the third
Uh,
dimension, apart from what
Thank
you
you.
say,
That's
Nehul.
it's not
Thank
a
you,
problem
Nilesh.
for. Thank you. It's good, but not a problem to for here, I think.
Yeah.
Yeah. Okay. So, thank you very much. I think
Thank
the
you, everyone. Thank you, everyone.
non-invest
Yeah.
that investor-focused question turned out to be quite a cracker. And I think some pertinent advice there, something which is often overlooked. While GTM strategy has got quite a few arms and legs and analysis out there, but GTM begins with the founder, and that is something the founder needs to really understand. They are the first element of any GTM strategy, right? And you got to do it right? You can't be fumbling around with your own startup's concept, your narrative, your vision for what you are building, why you are building, and how you're going to go to the market. Yes, that is important, but you can't be fumbling on that. You need to get that in order. So thank you very much, Annie, Nehul, Sorjendu, and Scott, for bringing out those perspectives. We are now running out of our time for our GTM panel, and we'll move on to our next panel. So thank you for being
Thanks,
here for
everyone.
Thanks, everyone.
insight.
Bye.
Thank you,
Bye.
everyone. Bye bye.
Okay, so thank you very much. Okay, now talking about our next panel. We had a fantastic panel for GTM, and now we come to the innovators, right? Innovation is going to be an extremely important element of your startup, right? We had this question about talking about that when you talk to your investors, investors are saying, hey, but that's already being done. What are you doing new? What are you doing different? Why or how are you going to create your own space in the market? How will you be perceived different? And that's where innovation comes in. Innovation in terms of how you deliver your product or your service, or how do you treat your customers. Innovation is what is your differentiator, not just once, but again and again. Because the moment you have a great product or a service, you go to the market and you become successful, there will be copycats who will come and go faster than you have been going and try to take over the market. And if they are better at GTM, if they are better at marketing, if they have got deep pockets to spend, they might go ahead and you might be left behind unless you are constantly innovating. So we have got some innovation experts out here who will respond to your questions. Uh, Let me introduce them, and let me invite them to come on video first. Larry, you are here. Let me add you to the
Yes,
spotlight. Yes.
thank you.
Uh, Thank you. And where are our two Ranjit? Yes, let me add you to the spotlight. And of
Yes,
course, we
hi.
have got Satish. Okay, yes. So that's our expert panel for innovation. And let me do a quick round of introduction. Lawrence, that's Larry for all of you, is the Chief Strategy Officer at ninjascan.ai, where he is driving a mission to make web accessibility both meaningful and truly effective. At a time when many solutions rely on surface level overlays, Larry and his team are taking a fundamentally different approach, scanning source code to identify and resolve accessibility challenges at their roots. Most of us do not understand accessibility challenges because for us, most of the things are accessible, but there is a population out there who faces accessibility challenges in terms of websites and other interfaces, and Larry and his team are solving for that. So through ninjascan.ai, it enables businesses to meet global standards such as the European Accessibility Act while also enhancing SEO, sustainability, and overall user experience. Larry is a strong advocate for ethical, performance based compliance, believing that accessibility should empower users rather than rely on any temporary fixes. His work sits at the intersection of technology, inclusion, digital strategy, helping organizations build more accessible, high performing, and future ready digital platforms. Thank you, Larry, for bringing in a very different perspective to the conversation today. And of course, your years of experience and the innovation related experience that you have got that will be adding value to the whole session. Next, we have got Ranjit, who is a senior technology strategist, thought leader, and a C-suite advisor with 25 years of experience driving AI, digital transformation, and growth strategies across global technology firms, governments, and enterprises. With 18 years at IDC, he has shaped executive agendas and market perspectives worldwide. He advises on national digital agenda, go-to-market strategies, and tech-driven transformation and major tech investment decisions. He's the author of Digital Nation from 2019, analyzing UAE's tech-driven evolution, right? Imagine a country's tech-driven evolution is being discussed in that book. He has built and led advisory teams of experts delivering 300 plus keynotes and is an active angel investor and startup mentor across AI, space tech, and digital platforms. Thank you for joining us, Ranjit. And finally, I introduce Satish. Satish is the founder and CEO of Simsi.ai, an AI powered venture studio platform advancing startups and innovation globally. With over 3 decades of experience across India, US, Middle East, he has led large scale digital transformation initiatives, including his role as the managing director of Anthology. A serial entrepreneur, he previously built Globepore IMS, digitizing 80,000 plus classrooms. Babson MBA and Harvard Business School certified corporate director, Satish is on a mission to democratize the startup and innovation journey, enabling sustainable, scalable, high impact startups and ventures worldwide. Thank you, Larry. Thank you, Ranjit, and thank you, Satish, for being here with us to field some of the questions coming on from the side of innovation. But before I jump into the questions, I would like to each one of you to give your perspective on what is innovation, right? Because innovation is now such a overused and often abused word where every startup pitch has the word innovation built and baked into their what do you call that, the 30-second pitch, because they feel unless they utter the word innovation, they don't get the foot in the door. So just spending the first 5 minutes of this segment on doing a quick post-mortem on what is innovation. So Larry, you can go first.
Yeah, well, innovation for me is, we can go with the basic definition, of course, what's new and not in the marketplace at the moment. But I think it's really at the heart of innovation is listening to the end user. What does the end user want in whatever particular area you're going to, whether it's software or coming up with a new concept for dining or whatever the case may be. So I think at the heart of innovation is doing things that haven't been done before, but they also need to be in a commercially viable way. You need to listen to your customers. I can't tell you how many times we've pivoted in the various startups that I've been with, much to our benefit. And that's the only way you cannot force your product down a customer's throat. You need to give them what they want. Now, you start off, you ask questions, you may do some surveys, but at the end of the day, if your product isn't exactly what people want, the market will tell you by, not having sales, for example. But if you are wise enough to go listen to the marketplace, that's where true innovation comes in, because then you're answering and providing a solution to people's problems. And that's how you get a successful company.
Fantastic. Ranjit?
Yeah, I think I would agree with Larry on all those points. So clearly innovation is been, as you said, it's been used and abused very often, not just in the startup world, but across organizations and so on, across industries, right? Everybody talks about innovation all the time, and I think that it is, of course, in the traditional definition of innovation, you can address different types of innovation, including product innovation, process innovation, organizational innovation, and so on. And then you have another way of looking at innovation, which is more about disruptive innovation, continuous innovation, incremental innovation, and so on. So there are sort of these different ways in which you look at it. And of course, increasingly, whenever there is a new technological shift, people often talk about how the technology would then lead to business model innovation, right? So fundamentally, how the technology will reshape business models. So all of these can be broadly brought under the umbrella of innovation. But really, as Larry said, the sort of the voice of the customer, the market fit, and what it really moves, how it really moves the needle in terms of behavior and outcomes becomes absolutely critical when you evaluate innovation, right? That's ultimately, be it in a startup world or in the corporate environment, that is what the real sort of the value of innovation can be measured in those terms.
Satish?
Yeah, thanks, Hemant. Absolutely. I think both Larry and Ranjit have covered generally innovation and also in the startup world. Let me see, in terms of I'll probably deep dive into maybe corporate innovation, sort of an innovation reality check, maybe quick 5 points. One today, when you look at the corporate innovation, almost from an innovation theater to innovation-led growth. The art truth about corporate innovation, perhaps 80% of the innovation initiatives really don't scale beyond the pilots. The open innovation often becomes more of a PR or probably not the P&L. And the R&D, R&D investments, and maybe the less of commitment to innovation for growth. Really, I think there is a lot of needs to be done in terms of corporate innovation and in terms of the execution model. All right. So those are my quick thoughts in terms of general innovation to startup innovation to maybe on the corporate side. So let me stop here, and I'm happy to come in and add more points.
Perfect. So now here's a question from Digambar. Digambar has not been able to join the meeting today, but I have got his question. And his question is generic enough to be useful for everybody, but let's see if we can take that. How do you design and validate a truly innovative fintech product that users trust immediately before brand credibility is built? This question has got 2 parts. One is about the startup, how do they build an innovative product? And the second will be from, let's say, an investor perspective or somebody who is evaluating the product from outside. How do they validate if it is innovative? What would differentiate, or what measures would you use to understand whether a product and its features are innovative or not? What are the lenses you would use?
Well, maybe Larry and Ranjit can add quickly. I guess one, it's about the trust, the architecture, maybe the compliance first design, maybe the UX and the data, the transparency layer, some of the micro validation cycles they need to go through. And most importantly, I think the security by design, right? Fintech. So the way to build the trust as a foundation is, do we have early user validation? Is there any cutting across any regulatory alignment, especially for fintech? And what is very critical, especially for fintech, is to really work with the need of the industry or some of the customers, and make sure there's a proven pilot and somebody backing before you go big. Those are my initial quick thoughts on this one.
I'm going to go with something with really a little bit more basic. I think that you're spot on there, but I'm going to go with the basic thing of how do you actually come up with your fintech concept? It all starts with an idea. You're not throwing darts against the board. You're seeing a problem in the marketplace. Something is annoying you, and you don't want it to annoy you anymore. And you figure it's probably annoying other people as well. And you figure if I can solve this, and I'm solving this annoying thing. And then the question is it annoying enough for people to pay for it, right? So you start by validating the idea by asking people in the industry, your friends, associates. If you're working at a company, maybe you're asking some clients or business partners or senior partners at your firm, wherever it is. And that's how you start validating the idea. Then you start figuring out how easy is this to do, right? Is this going to cost $1 billion? How many people can come up with that to go after an idea other than Meta sort of chasing and throwing $20 billion at a metaverse that nobody uses? There are a few people or companies that can afford to do that. And the ultimate validation, of course, comes again with people deciding that they're going to want to buy it. And you start with beta users to sort of feel things out, refine and hone your concept. And at the end of the day, that's how you end up with an innovative fintech product in the marketplace.
Yeah, if I can add to that, I think that we certainly don't know what type of fintech is being referred to in this case. Fintechs, there's a whole different types of them, including consumer finance to wealth management to payments and so on. So there are different types of them. But as Larry said, I think that it really starts with that workflow, right? That you've identified within that particular area. Which needs improvement or innovation, right? So that particular workflow, what is that workflow that you start with, which you think needs improvement? Then of course you have all the sort of trust factors, and that is where regulation comes in as well. But also things like transparency, how do you create explainability, and so on and so forth, and security comes in as well. In many cases, fintechs work within the regulatory jurisdiction of specific countries or maybe cross countries and regions. And so they often have to try and test them within those regulatory sandboxes. So you have to really try them out and engage with those regulatory frameworks before you can actually release it to the market and so on. So it is a lot of work, particularly in certain areas. For example, it could be in payments, for example, or whatever else. So I think there's a lot that needs to be built in terms of trust, and there are these frameworks, especially driven by regulation, that will allow you to build that trust, with the regulator first, and then with the customer.
Fantastic. So yes, I mean, I'm sure the non-fintech people out there are also getting some insights from this. Fintech being a very regulated area would require that kind of scrutiny also from the founders' end, and assuring and ensuring that they are covered from the regulatory perspective. Well, we have another question coming up. There's a gentleman or lady by the name Indispensable. And there is a question from them. So, Indispensable, can you come on video and ask your question? You can unmute yourself. I saw your hand raised for the question. And anyone else also wants to ask a question, you can simply raise your hand and I'll pick who can ask the next question. Indispensable is no longer responding. Just responded. Okay, I'll give you one more chance. Indispensable. Okay. So we don't have indispensable asking the question, but okay. So, uh, no, not yet. Okay, so another
Well, yeah,
question which we actually have from a couple of different founders is the whole thing about using AI or generative AI in consulting and design workflows to build some sustainable competitive moat. And they are now like we started building that, but now it seems everybody else is also doing that, so it's no longer a competitive moat for us. So the question is generally about the use of generative AI to build an innovation moat around the product. Is it advisable, or the boat has sailed, the train has left the station, and generative use of generative AI to create a product or a competitive moat is no longer advisable? What would you say to that?
So
I'll go.
if I can just start off maybe by just giving some the sort of initial points around this, and then Larry and Satish can probably build on that. So I think firstly, AI, generative AI, and agentic AI increasingly is disrupting the consulting business, right? Big time, consulting services. Um, what we are seeing is this trend towards this transformation of services into services, or consulting services into services as a product, as they call it. So essentially, these services are being consolidated into AI products or AI models and so on. So essentially, what is happening is that what these consulting services will now need to, or the consulting services firms and those who are offering consulting will now need to build sort of proprietary knowledge models that codify their services, and so build their internal IP based on these AI models which codify services. That's one thing. So how do you kind of capture your experience and your knowledge into AI and then offer that as a service or as a product through a platform to your customers? The other thing that's happening, of course, is that the traditional FTE model that is based on the number of consultants and the time that they spend on a consulting engagement. That linear model is changing, right? So we're now moving to non-linear models where the consultant is augmented with AI, and there's no direct correlation between the number of consultants and the hours spent and the value of the engagement. And so the consultants will need to be augmented with AI and supported with AI tools and so on. And that human AI combination is what will then deliver value in consulting. And the third thing is this shift towards outcome-based engagement, right? So we are seeing a lot of that happening in the consulting world. Increasingly, consulting customers are asking for outcomes and not just time or PowerPoints that's been delivered and strategies and so on. They're asking for clear outcomes from their business point of view. So how can you also get more involved and have skin in the game and commit to business outcomes, as I know that at the end of the consulting engagement.
Yeah, I think I'll answer by focusing on the whole moat concept that the questioner is looking to sort of pinpoint here. Unless there's only two ways you can create a moat right now, because otherwise, I mean, all the information's out there. Someone can take an AI and train it the way they want it to, in order to overtake you in any sort of way. The only way you can create a competitive moat is by having proprietary information. If you can train your AI on proprietary information, that's the only way you can get a distinct competitive advantage. And you then need to be able to patent whatever you're doing, because otherwise someone will just take an AI, train it on your AI, and your proprietary information is out the window. So that's a big challenge. And I'll give you an example where that can come in besides NinjaScan, we own a company called Pixel Free Studio. And they were originally in the design to code space. The first ones in the market, we have patents dating back to 2016, which is really our saving grace. And what we do, and vibe coding is all the rage right now. Everybody knows about it, loves it, but it also has a last mile problem. It'll get you 90-95% of the way there, but then you need a human to do the last 5%, and then you need to, troubleshoot it, because a lot of times there's some broken code in there. If you can have a product like our product goes from design to code and creates perfect code. So it'd be ideal for training an AI in a little sandbox to create perfect code from cradle to grave. If you can have a concept like that, then you can actually create a competitive moat. But absent that, and putting out patents that are airtight to protect you going forward, it's really impossible in today's world.
Perfect. Thank you. Thank you. I think Indispensable is back, so I will allow Indispensable to come on video and ask the question.
Um, Hi everyone, I'm Suraj. My name is Suraj, and I want to ask what the innovations means. If I have AI-based quant trading app, so what I have to do so that I am very different from my all competitors.
So why don't you describe a little bit in a minute what your app does?
Um, in simply 1 minute, in today's time, working professional, college student, or any other middle class, they don't have time to invest their time in making the assets. They just invest their money on liability. So my startup only target that audience that they will just give money and then tell me that I want to invest this money. Can you please do that for me? That's my idea.
So
if
for
I'm
me, it sounds
understanding,
like
yes,
I'm sorry.
yes,
I'll go first. My apologies. So for me, it sounds like the way to set yourself apart is to have you need to show a performance here. You're trying to get people to invest essentially in your fund, and I would look into the regulations wherever you are first to make sure that you're in compliance before you go put an app like that out there, because they're depending who your client's going to be and what
Okay.
countries you're going to make this available, compliance is going to be a big part of what you need to address. But absent that, it's all about performance. If someone's making a huge return, people will flock to them. And it's about having a proven track record, something that's publicly disclosed, timestamps that people can document. If you can do that, then you got a shot at being a success.
Yes, absolutely.
Ranjit, Satish, any advice for him? For
No,
Suraj?
absolutely. I think Larry covered, and I think some of the answers came in the previous question as well. I guess one, apart from most importantly, the compliance, right? That's one. And what is the proprietary differentiation, right? What is that we have something that others don't have? And second, the data, the workflow integration, and most importantly, I guess the decision intelligence, right? That probably what kind of decision that you're arriving at to make better returns than they themselves doing it or anybody else doing it. So really about the core capabilities and compliance, I think some of those aspects needs to be looked at.
In my knowledge, there is no one who can doing this. Just I am telling you that if in future I have any competitors, so what will the innovations means that I am very different from others.
So I think if I just add that, so I add to that, I think you're looking at you're trying to look at the long term. So the moment you have innovation, you something innovative, and you want to sort of create that moat for the long term, right? So obviously I mean, none of us has that view as to what's going to happen in the long term. But I think you really have to look at the behavior of your customer, right? So if the customer, what the customer needs are at the moment, if that is shifting, you have to stay very close to the customer's needs, and keep looking at the customer's behavior. And if there are shifts in behavior, you have to be able to adapt accordingly. So that's very, very important. So whatever the need is at the moment, if that is likely to shift along the way, then that could change your market and the quality of your innovation and your product, right? That's one. The second thing is that you need to look at whether this product is going to make some changes to the market itself. Will it disrupt the market? If it's going to disrupt the market, then it will probably last for longer. If it is just incremental or me too and so on, it may not last that long. So if you want to safeguard your innovation for longer. The third thing is your cost curve analysis, right? Over time, are you able to offer this service, where the cost curve is downwards, right? So as you scale, the costs go down rather than remain at the same level or go up and so on. So can you offer this in case there are Me Too competitors who come into the market, who copy you? Will you then be able to at least sustain on the basis of cost as well? So you've got to look at your cost curve as well. And then, of course, the regulatory piece. What is your view of regulation in this space? So are there some regulatory changes that are expected in the future, or some new regulations or old regulations, or or deregulations that might emerge that could change the dynamics in the market? These are some of the things that you've got to keep your eye out for.
Yes, but the main thing I am implementing in my startup is that tokenization. And also the CEO of Oracle also said that the tokenization will be the big change in the industry. So if I tokenize a factory and get a small part of it, and then only some middle class, you can say, if they have such a money and they have to invest in it, so they can do that, or it will be very efficient for them also. And I can also at now's time, I contact in some people's, they just say I'm investing my money, but I just want trust from you. So the first thing I have to do that we have to build the trust that indispensable will be always with you. So it is that.
Absolutely.
I think you answered your question. Yeah.
Yes.
Yeah, I'm gonna put my lawyer hat on quickly, just to add one last thing. You're talking about tokenization. In many countries, I know in the US, for example, in the instance you just described, that would be deemed a security, and you'd have to do a whole bunch of securities filings. So just be really careful when it comes to that you check that part of the compliance.
Yes, yes.
Perfect. Thank you. We have got Jatan Wani here. Jatan, I had been looking for you for quite some time in the session. Finally, you are here. You can ask your question now. Make it quick. Give the quick context to the question, which is an introduction to the business and the startup, and then jump to your question. Keep it fast and quick.
Thanks, Hemant, for giving me this opportunity. So, hello guys. My name is Jatan Wani. I'm a founder of Lead Equator. Basically, it's a B2B AI-powered organic engagement intelligence system, which is helping B2B tech companies to promote their product and services in front of their target audience, who is showing the high intent on the internet. So our system, what it does is it scans, it monitors the social conversations, it finds the high intent post, it generates the contextual humanized replies, and give the authority to the business owner to interact with their target audience and convert them into the leads. So basically here, the business owner will get high quality leads. We are totally against of the paid advertisement. So we can say we are the competing partner. So the thing is right now my question is we are developing something different. We are creating a new category. Basically, it's a category defining product, right? So the question is we are able to develop an MVP right now, but it is not up to the mark that it will add some value into the business at this moment. But we are having a solid plan ready till the version 4. It's version 1 that we have launched right now. Version 4, we have having the good, our vision is to automate whole sales process, from buyer discovery to the revenue generating. That's our plan. And yeah, so to develop that, we need funds basically. But at this moment, when we have approached so many investors, they are looking for the tractions at this moment. Our product is having a very good market. It's in demand. Demand is validated basically from the users that we are having. We are having 100 plus users, business owners into our waitlist. 20 is onboarded using our beta version. But I know like it's not up to the mark because we are not able to do that right now. That's what want to achieve. So the question is like, what exactly the investors is looking for? Like we are having the potential, but we need funds. That's the thing. So what's your point on that?
Okay, let me there are several aspects to this, Jatin. One dimension I'll answer, I'm sure, Larry and Ranjit can add more value, more inputs. See, one, I think in terms of the innovation, what you just explained, if you look at, maybe just assume there are 4 levels of, value creation, capture and, delivery, and then you're capturing, right? So maybe initial, probably one way to look at it, like, okay, what is the sort of a $10 value, $25 value, $50 value, and $100 value, right? So, and then which segment will value the most, right? The entry, right? And get as many as possible delighted customers, the repeatability, and with a very, very clear visibility on the LTV, right? What is the long-term value of this customer is going to be when you invest more to build more of level 2, more of level 3, and level 4, right? So I would probably look at what is the entry point and level 1 and sort of focus on, deepening that with a clear delighted customers who are willing to go further at level 2, level 3, level 4, right, at a much higher and come up with the LTV. That's one. I'm only talking about the innovation, sort of how do you sort of break it into, maybe 4 different levels and then take it on instead of trying to build everything and go to market, right? Which is where most of the entrepreneurs or the innovators, you just pick, niche problem and solve and prove it and then take it. So obviously there are a lot more other areas in terms of the team, how you can present and write investors, right? So obviously all those things are there. So only from an innovation standpoint, so, just break it into multiple and focus and then build it stage by stage. That's my input. Maybe Larry and Ranjit will add more.
Yeah, like I wanted to add something like right now, like as per like
Jatin,
our model is very heavy.
Jatin,
Yeah.
you have asked Jatin, you have asked the question. You'll have to allow the experts to answer.
Sure.
Okay.
Yeah. So
Larry,
if I can just add to what Satish said, I think investors will obviously look for some de-risking, right? So they will not want to take a big bet on something that's untried or untested. But in your case, you've done some amount of testing with your customers and so on, right? So you've got some feedback, customers, and so on. So I think it's important to have that sort of, you could call it a thin slice MVP, some form of an MVP that's necessary. You also have to show some evidence of demand. I think you mentioned some of that. And then, of course, you can do things like simulation and so on to sort of satisfy investors. But I think the most important thing to look at for your case is who are the types of investors that you're going after also. The risk profile of various investors does vary, right? So if you might find investors who are willing to take higher risk, at very early stage startups and so on. And there are several of them, especially in the angel community, and also who really come in at very early stage, where there's no full MVP ready, and so on. And so the different types of investors, different profiles of them. So you might want to also look at the types of investors that you're going after.
Yeah, those are all very good points. Proof of concept, traction. Investors want 1,000% return, and they're highly risk averse in general. You have to find ones that have that appetite. The last thing I want to add is that it's helpful to find investors who know your industry. Investors who know your industry, whatever your novel, specifically because you have a novel new concept that you're getting in the marketplace. If you get somebody who understands what you're doing and they can buy into your vision a lot more easily, and it makes the decision for them to invest a lot easier. If you need to explain your story to somebody, then the likelihood of getting investment from that particular investor is very low. So I'd say go after the ones that are familiar with your industry, in your industry. Those you'll have, 70, 80% chance of closing. The ones who don't know what your business is all about, you'll be in the 10 to 20% range.
Yeah, good point. Thanks.
Good luck.
Thank you. Thank you, Jatin.
Thank
We
you.
have Lopty Pascal waiting to ask his question.
Yeah, thank you so much, Herman. Yeah. So my name is Lopty Pascal. I'm a solo founder. Yeah, so I am building the infrastructure of how AI identify and recommend professionals in this AI search era. Yes, so it's corporate law, and I launched in March, and it has over 1,400 professionals sign up. Yeah, because they want to get recommended on AI systems. Yeah, so I am a founder, like I'm a technical founder, so I'm more concerned about speed as well, especially. So my question is this simple, to you all experts. Like I want to know, what do you think, yeah, is the best way for me, to keep that human touch and allied reputation, even as the tech move faster. Yeah. You
Well,
I
yeah, I'll
yeah,
start,
so
I think, if that's okay. I'm sorry. Go ahead.
Yeah, so I'm asking, because I'm dealing with speed. I'm building a new infrastructural layer. Yeah, because I've observed like we are moving from the SEO game, like is moving from from the normal page ranking to entity recognition. Like so AI tools, they don't just recommend people, but now the problem I observe is that from a two-way perspective, one, the trust, when it comes to AI recommending experts. AI, most experts, unlike agencies which have websites and all, large schemas, experts are buried on social medias, and all these social medias, they have block ways. So most AIs can't penetrate to really get the context, of who they truly are. And they have scattered, profiles all over the internet. So that is what, like based on my research, working with and within the Google ecosystem. Yeah. So I discovered, these experts, their informations are so fragmented all over the internet. So it really makes it difficult, like, for AI to really pick who is the best person, to recommend in this place, at this particular, search query. So, and now most target audience, they are shifting, like people are so in love with AI. So they use it every day, like, to ask for things. They even trust it, to give them recommendations. So when people go to AI to ask, who is the best person in this, AI mostly, likely end up recommending agencies instead of individuals, but mostly not really because the agencies are good, yeah, but because they are easy for machines and systems to trust based on, their signals. Yeah, so I am building the infrastructure that helps, professionals get recommended and, stand out in this era. So I have done with the first phase for the professionals, which I have given them an, SEMrush style, dashboard, which is a system that helps to audit their online presence, like all their online presence, and helps them to improve. And as well, it also helps them to track their mentions across AI systems in real time and see who is ranking, in their industry for a particular keywords like that. Now for the AI system, which I'm currently almost done with the trust verification, the trust verification layer, because that is one thing which AI, look into. So my platform should be able, by next month to be able to verify any expert, with their real life credentials. So you think about my platform, you're thinking about something like, Google My Business for professionals, the same way Google My Business functions for agencies. I am building that Google My Business, for professionals, but for the AI, for the AI agents.
Lopty
So
Pascal,
yeah,
uh,
yeah.
we can have the experts answer that now.
Yeah, so my question, what do you think, is the best way for me to keep that human touch and allied reputation even as the tech moves faster? Yeah.
So maybe I'll just quickly make 2 points. Okay. One, I understand it's a two-sided platform, right?
Yeah.
And in terms of, this is where when you're making a recommendation, even it's a end of the day, what data, right? Is it validated? Can you trust
Yeah.
very? So going anything by third party is always a risk, right? I mean, I can go to Google and put whoever I am, right? But who will verify that? So I think one is, you can use whatever the external data outside your ecosystem for a baseline, but based on number of transactions that you have with your own ecosystem and the rating they give, right? I'm a seeker and somebody is a provider and I'm happy and you capture. So your recommendation should be really eventually based off of that. That's one. The second one is generic, just make sure on both the sides, those are the ones who are actually eventually will be a paying customer, right? This is something that I've seen entrepreneurs initially, we go and spend a lot of energy, but later on, post pilot, freemium, is that, am I getting the right kind of both the sides, somebody who's willing to pay for the pain that you're going to solve. So those are my two quick inputs.
Yeah, just to ask a question, Pascal, is that so? So I assume that you are also offering this platform also to agencies, right, who have their own proprietary verified profiles of experts, right? So you are offering this as a platform to them as well, so they can use the platform, they plug in their own data into your AI platform. Is that an option as well? Is that one of the things that you're looking at?
No. There are so many platforms which are solving already, the agencies, that of the agencies, like most of the competitors are focused on agencies. So I am building specifically for, preparing experts like people, like lawyers, like, experts in different fields, like doctors who can, because most people go online now to search for these things, but now they get recommended to just agencies. So I'm giving experts the same, visibility and the same, authority, same as agencies. So that is what my solution helps to do to professionals. So they can rank the same way agencies rank in AI systems and both in search engine. Yeah. So if the agencies I'm giving my solutions to, like you can be a service provider, you have influencers you want to rank. That is, so I have a plan that you can host more profiles. So it means you are an agent. I treat you like an agency. So you can get that plan and host multiple profiles. Yeah, and work on them.
Yeah, so I think you need to look at so clearly the agencies have trusted, verified profiles, right? Because they're working on this for a long time, and so that is why so there's value in it, which is why the end customers go to those agencies in the first place. The question is, how do you build that? Right now, you are targeting the larger sort of individuals, right, who are going to put up their profiles on their own and so on. So you will have to work through a process to build that trust and to verify that data. And that's a challenging thing, because you're assuming that the individuals will put in accurate, trustworthy data into this, right? So my suggestion would be that you also have to work with agencies. Think about how do you work with agencies as well, because they have their trusted data. If you're able to offer them the platform as well, that could be another way of looking at it. So you can build that to be another stream through which you can part of a business model where they can use your platform, where they have the data, you provide the sort of AI platform that they can use that data on.
Fantastic.
Yeah, I
Thank
couldn't
you.
agree more.
Yes.
I'm
Larry.
sorry. Go ahead.
No.
Yeah, no, it was
Larry,
quickly. I couldn't. Thank you, Armin. So I couldn't agree more. I think the biggest challenge with that business model is, you make money off of people paying you to promote them on AI, and you're going to have to really walk a tightrope to make sure that everybody is 100% verified. Otherwise, it tears down the reputation of what you're doing and undoes all the hard work that you're putting into it.
Fantastic. Thank you, Lopty, for that question. And with that, I would like to basically we start towards the conclusion. Here, one of the things I've always felt is that startup founders who are looking for help in terms of whether it's innovation or whether it is getting clarity, or even, earlier conversations about going to investors, struggling with their GTM. From an innovation perspective, where do they seek help from? One could be, of course, industry mentors, but beyond the mentors, finding the right mentor is also a challenge. So how do they go about that? And what are the other channels they should look at from where they can either get help in terms of understanding innovation or actually executing innovation in their startup or business. So this time, Larry, then Ranjit, and then Satish, let's follow this order, and we would love to hear on that note.
Yeah, would you mind if I go third, just because I'd like to hear what the other gentlemen have to say on this, and I think that they could provide some great ideas. I've loved hearing what they have to say.
Sure, Ranjit.
Yeah, sure. Yeah, nice one, Larry.
Innovation.
So yeah, I think there are. It's a very broad question, right? Obviously, I think there are obviously several things that I think Larry mentioned this earlier as well. You sort of find founders and mentors and advisors from your industry or the industry that your startup is in, who really understand that domain, that industry, workflows, business processes, and so on, who can really advise you on the shifts that are happening within that. Right? So that will drive some of the innovation that you're going to be implementing. And the second thing is, of course, stay very close to the customer. The customer is your best teacher. So you have to keep your eye on the customer or the customer behavior, how it's shifting and changing and so on across those workflows and so on. I think one of the big traps that I've seen with founders is that they develop something, they innovate, and they develop a product, and then they get stuck with that. They do not watch the market effectively enough. They get trapped in this one way of looking at things, while the market shifts outside them, the technology shifts happen. So also keep an eye on technology shifts. For example, if you are in e-commerce and you had a great innovative idea in e-commerce, let's say 2 years ago, you got to now innovate with in this era of agentic AI. I go to look at agentic commerce today. So you got to keep your eye open for several things: the customers, your advisors and experts, your investors, but also what's happening on the technology front. How that's going to fundamentally lead to more innovation to your product or your service and so on. So it's a very broad way of answering a very broad question, Hemant. I'm sure Larry and Satish might be able to give you more specific comments.
Sure. Satish.
Yeah, so absolutely, as Ranjit said, is very broad. Maybe I'll just pick a few areas, right, which I think fundamentally matters as an entrepreneur. I think one, innovation, obviously technology is very common, everybody talks about, but I think the business model innovation, I think that's very fundamentally, if you look at maybe take a lean business model canvas, there are 12 boxes or theses. Fundamentally look at, right, how distinct, defendable, execution path that you can come up with. So I think one is clearly the business model innovation, right? I've seen. Second is your strategy, right? In terms of what are those activities you're not going to do, what are those activities you're going to do, and what are those activities you're going to distinctively do well compared to others, and what are the linkages between those activities, which makes you who you are, right, or who become through execution of that business model, through your process, operations, automation, and so forth. I think that would be the second in terms of strategy, right, of executing that business model. I think the third is obviously execution. For entrepreneurs in general, always I've been an entrepreneur before, and I've seen through revenue can be like a vanity, and profits then, and the reality is truly not even sales revenue, profit, but really the free cash flow that you are able to produce. That becomes a true reality for early stage entrepreneurship journey. So I think that's another how innovative you are to sort of go through that quickly and get to a stage where you can produce free cash flow, right, from initial sales, traction, revenue, your profitability, and after further investment for growth, what is really left, right? I think that's what I'm saying. So I mean, these are some of the areas that you can look at how you want to be innovative in terms of what problem you're solving in the marketplace. Let me stop here, and maybe Larry can come in and add more.
Yeah, I mean, when it comes to innovation, I think nowadays, if you want to be, particularly in the tech space, you want to be a founder, an entrepreneur, you have to be crazier than ever. I mean, today, Claude 4.7 is the best. Next week, it's Chat 8.5. I mean, it just makes you nuts how quickly innovation is happening in so many different areas. You come up with an idea, nobody has it, and then you wake up one morning to find, oh, somebody over in Singapore is doing what you're doing, but they're doing it even better. And it's just so difficult and challenging nowadays. But if you truly are committed to this, tech obviously is a great way to gain traction. But I think I would start thinking outside the box and thinking about ways you can innovate in other areas. The world's always going to need plumbers. I'll give you an example on that. I had a friend of mine, he went to the military service, came out, was a plumber, and you think, oh, okay, he's going to make a decent living, whatever. He decided to start selling contracts to people. So basically, I will be your plumber. You pay me a monthly service fee. And if I have to make a house call, then it's only going to be X instead of being 2 or 3X. He ended up selling his business for $40 million. So there are a lot of different ways to innovate. And that's what I think. And if you're looking for that idea about what can be innovative, I'm going to go back old school and reference Albert Einstein. All of his best ideas came to him when he was silent and going on long walks. We live in a life where we're being bombarded by stimulus all day long. Take some quiet time. Just let your mind go free. Let it act as an antenna out into the conscious world, and you'll be surprised what can come to you.
Fantastic, fantastic. This kind of reminded me of something which was brute force used in the context of hacking or cracking passwords. If you can't crack the password or if you don't have a great algorithm, simply try out all the possible combinations, and at some point in time, there will be an answer. And Larry, what you said was about you have a brilliant idea, but the next morning you discover that somebody else in another part of the world has not only got the same idea, but he has got the MVP ready. It's already out in the market. And a reflection of that is something which we saw a few months ago, where the Silicon Valley started talking about the 996 phenomenon, which was working 9 a.m. to 9 p.m. for 6 days a week. They were working 72 hours a week because the threat that your competitor might deliver on a product, service, or an MVP or a feature before you had become so big that they had to get the feature out immediately right away. They couldn't wait for the usual software development, testing, MVP, beta testing cycles. They had to get it out. And that's the world we live in. Innovation itself is being pressured by your competitor. Your competitor might go ahead. And so if you have to innovate, you also have to bring in the element of speed into innovating, and that also constant innovation, right? So thank you, Larry, thank you, Ranjit, thank you, Satish. I'm sure our audience got a lot of insights on how they should be looking at innovation, how they should be treating it, how they should be looking for areas of innovation in their existing business, how they should be looking at developing a moat around their business, because innovation is what is going to truly help a business sustain. A great product, a great service by itself will not be a long-term sustenance measures, because as soon as you are successful, there will be 100 others who would want to do the same thing. And if they have got deep pockets, if they are better at GTM, if they are better at marketing, if they have got better connections in their audience pool or the customer segment pool, they might just go ahead of you in the race. So innovation is your competitive mode, but it will require time, effort, energy to be devoted to bring it about. So thank you once again, Larry, Ranjit, Satish. Thank you for joining us and bringing those insights to the table.
Amen.
Thank you.
Thank you
Thank
for
you very
having
With
us.
much.
that,
Thank you for having